Hello, hello. Welcome to Canadian Money Talk. No, gone. Hello, welcome to Canadian Money Talk. If you have any questions about personal finance, investing, feel free to ask. Canadian preferably, but I can look up American stocks as well. Getting to early retirement, whatever you'd like to know. Hello, welcome to Canadian Money Talk. Any questions about personal finance, investing, stocks? Feel free to ask. I will try my best. However I can help. Yeah. NVIDIA reported today. Looked like it got near where it was supposed to. Stock stayed pretty much flat in the after hours. We'll see what happens tomorrow. We have Canadian banks reporting, looking pretty good. So far, anyway. The big guys report tomorrow. Got CIBC, Royal Bank, and TD reporting tomorrow before the open, so we'll see how they do. We had BMO do fairly well. Bank of Nova Scotia not quite as well, but not bad. NVIDIA reported today. Didn't seem to go up a lot or take a tumble, so they did okay. If you have any questions about personal finance, investing, I can look up stocks for you, give you my humble opinion. More than happy to help. If you want taxes, I'm far more versed with Canadian than US. So anything I can do to help, reaching financial independence. I've been retired for over 5 years from my IT job, living off of my investments. TSG says hi. Well, hello. I hope you're having a good evening. You're a Canadian. Excellent. I'm in Edmonton. I started at 7 Mountain Time. So are you back east? Anyway, if I can help with anything, if you're over 18, you can invest. I've had fairly young people come on, which is great. I'm trying to get into a program to teach like basic personal finance in schools. So it'll be like credit cards and budgeting, that kind of thing. So even younger people can can benefit from, living within your means. And what's my favorite hockey player in Edmonton? I'm gonna disappoint you. I'm not really a hockey fan. like I know the rules and all that, but I moved from Vancouver about 8 months ago, and I wasn't a fan of the Canucks either. Sort of selfishly, there used to be a player in Edmonton named Ales Hemsky, and my first name is Ales. And in Vancouver, nobody knew how to pronounce my name. It's spelled Ales, but then there's an accent on the S to make it a sh. So in Edmonton, people, at least hockey fans, which would be pretty much everybody, seems better at pronouncing my name. But yeah, I'm more into doing sports than watching them, probably. Like if somebody invited me to watch a hockey game at their house or something, I wouldn't say no, but that's just not, like, I'm not going to pay $300 a ticket or anything like that. So yeah, I guess by default I like Ales Hemsky, who doesn't play anymore, I believe. I think he retired, but he was well known in Edmonton. Yeah, I do a lot of biking. I don't own a car, so that's more of my sport. All right, well, you have yourself a nice evening. All right, whoever's left, if you have any questions, feel free. Anything about personal finance, investing. There's Bibby. Hey, Bibby, what can I help you with this week? By the way, I do alternating weeks here on YouTube, and then the other Wednesdays I do TikTok lives. The YouTube ones are a lot more peaceful, so I do enjoy them more than the TikTok ones. But because in the TikTok ones there's more people and I get behind in the questions. So here we're looking pretty good. But anyway, Bibby, we had NVIDIA report. It looks like they kind of came in like they had much increased revenue, 12% increased revenue from previous quarter, and a 78% rise from the same period last year for revenue. So it's a new record for them. But nothing seemed to happen with their share price in after hours. So Baby says, let's chat Canadian economy and possible impact of tariffs. I saw just the latest news headline that, and Jeremy says, yo, hello. NVIDIA is too rich for me, kind of like Tesla. Yeah, I can't get myself into NVIDIA. Definitely not into Tesla because of Elon, but both of them have a really high PE, and that's just not my thing. Yeah, I saw the latest news where Trump says that he's gonna give Canada and Mexico till April 2nd now. There seem to be some mixed messages between him and White House staff. So he's losing credibility. So I think there's going to be some pop in the stock market just because a lot of, or not a lot, but some of the tariffs were priced in. Like everybody thought he was just using it for bargaining, which it looks like he is. So I wouldn't be surprised if there was a nice pop tomorrow, personally. But yeah, the tariffs are just overall a bad idea. The man is misguided, to put it politely. So yeah, I don't think it's going to happen, or it's certainly not going to be 25%. Bibi says, in case of a recession, that would, yeah, that wouldn't be my base case, but fair enough. Do you have anything on the sniper list? Well, like financials and even oil would, if it was a worldwide recession, it would do poorly. Canadian financials will definitely take a little bit of a slowdown if you have a recession in Canada. Oil companies, for example, and energy. Same thing with miners and materials. If there was a worldwide recession, I could see them coming off. So yeah, banks, if you have a Canadian recession for energy, I think it would have to be more of a worldwide recession for the price of oil to go down and, for their share prices to come off. As far as sniper list, I'll tell you, it was last Friday, the first Friday of the month. Oh no, a couple of when did I do that? Almost 2 weeks ago. I sold a couple of put options on Sun Life and on MTL, which is Mullen Trucking. So basically, I'll take more shares if the price goes down. And so that, I guess that would be, if you want to have a sniper list, that would be that. And what I have out from 2.5 weeks ago is Northland Power also, that I'll get more if it goes down, but it's actually been doing quite well. And Whitecap Resources and Bank of Nova Scotia, which had a bit of a dip when they reported. But they seem to be doing okay. So I guess that would be your bank, and Sun Life would be your life goes. Bibi says, I'm lagging behind with the option part. Cannot yet dedicate the time to understand them since I'm still working. Yeah, I'm sort of doing it for fun and for a little extra cash flow. Sort of like betting on a horse because it is so short term. I wouldn't really call it investing. It would be more speculating. But I like the extra cash, and I'll take the stock if I get it through the puts, or because I got about 70,000 on a margin loan, I'm selling a few calls as well. The calls I have right now are on CNQ, but high, and Royal Bank and CIBC, which were quite well timed because both of them had sort of peaked and now they're sort of trickling down. But if the share prices were to shoot up, then I would lose the stock, and then I would pay off the margin loan. But yeah, options I got into in the depths of COVID, and it was like mind blown as far as the stuff you can do with options. Like with stock, you can basically think it's going up, I'm going to buy, or it's going to go, I'm going to sell. I've never shorted a stock, but I guess that's another way of saying I think it's going to go down. But with options, you say, well, I think it's going to go down, but not very much, and then you can set up the options in order to profit or maximize your profit in that situation, and then you can hedge your risk. So like options are, well, what I'm doing with it is really simple. All I'm really doing is I'm selling puts, I'm selling some calls, and sometimes I do both on the same stock. So I'll lose the stock if it goes up, I'll get more if it goes down, and I collect cash along the way. So I'm kind of doing 5 or 10% of what you're actually able to do with options. Anyways, I've done YouTube videos kind of showing what my process is and so on. But really, I do it for accumulation of stock with the puts, and then selling of the calls afterwards is it's called the wheel strategy, where just by having access to money, you're able to basically get double-digit annualized returns. Because like I get a couple of $100 for some of these, but it's over a 6-week period. So when you annualize it, it ends up being what was the last set? 23%, 15%, and 12%. And I do it every month, so it is realistic from that perspective. So it's kind of cool. Baby's building a margin capability in IBKR. Cool. Yeah, that's where I do my options. Even though I've been taking advantage of Wealthsimple's um, matching of 2% for RSPs and 1% for everything else. So I transferred over all of my US individual stocks. Um, so that'll get me the 1%. And I initiated the transfer last week of I think 460,000 for my RSP, which I had to sell all the mutual funds because Wealthsimple doesn't do mutual funds. So I'm gonna excuse me. I'm gonna do a YouTube video about the whole process and the ETFs that I'm gonna pick um, on the Wealthsimple side once the 460 odd thousand in cash makes its way over. And then today I initiated a couple of Canadian stocks in a margin account in Qtrade to go over to Wealthsimple just to clean things up a little bit and have everything in one place. Wealthsimple also does options. I think I haven't checked the pricing yet, whether it's cheaper than IBKR. IBKR is fairly sophisticated when it comes to that. Like Qtrade, which I started out with options with, wasn't great. Same here, moved a large RSP and a full TFSA over to Wealthsimple for the matching. Wealthsimple doesn't have all the functionality, which is just who they are. Like when you're looking for research, like even like stock ratios, I would actually go over to Yahoo Finance Canada if I didn't have Qtrade. So yeah, Wealthsimple isn't great that way. But anyway, because I have a margin account there as well, I'll see what options they have, like what the functionality is. Yeah, they're not great on the functionality, but I kind of like that they have, high yield savings account, which I'm taking advantage of, and like the fact that you can loan your stock out, that they have things like that, and they even have like a private equity ETF, which is professionally managed. They definitely take their fees. Don't worry about that. But like private equity, otherwise would be a bunch of research, bunch of reading, and you would have to be a accredited or an eligible investor in some cases for some of them. But here it's and like I'm not advertising it. I don't get any commission. But I think I did a video on it because somebody asked, and like there's 800 plus individual private equity investments that are in this ETF that Wealthsimple has, which is kind of cool. Like I like that they're trying stuff. They kind of have their brand and anyway. Is my Asia bet coming to fruition as of late? Yeah. Alibaba, Baidu, and Tencent is what I own, and they've made a very nice recovery. They're still pretty volatile, but yeah. I was actually listening to a Morningstar podcast on YouTube where there was an expert on China, and he seemed pretty optimistic about China in general. I'm not that happy that their demographics aren't really working for them anymore because they're not growing their population because of the one-child policy way back when, which they had since canceled. But the the lower population is going to make its way through the demographics. So that's sort of my only um, knock against China. But yeah, I've had a good comeback. Um, okay, Rand says, do you believe in selling stock at peaks and taking some profits? Uh, Short answer is no. I try to be a long-term investor, um, and hold stuff forever, like the Canadian banks. Like I have no intention of selling. But as I had said earlier, I sort of say, well, if it happens, it happens, but I'll collect some cash. So what I do is I sell covered calls. So, for example, Royal Bank and CIBC have had great runs. They sort of hit a peak and then they started kind of drifting down. So I sold covered calls up here. For Royal Bank, to be fair, I did it for $35,000 worth of Royal Bank stock, but I got $400 for that, which turns out to be only 9% annualized, because it was a lot of money. And that expired worthless because Royal Bank went down. CIBC, same thing. And that got 10% because banks aren't all that volatile. So I'm basically, well, if it happens, at least I'm going to make some cash along the way, and I'm going to pay off the margin loan. But Ranj, I think where you're going is like I don't try to time the market, let alone individual stocks, and jump in and out and all of that. You sort of get a gut feel if you've owned a stock for a while. Let me tell my phone. I would, I wouldn't jump in and out, because timing it is just, we're going to be wrong as humans. We're terrible market timers. But if you get a stock that you're familiar with, you got a good feel for it, and you kind of know what it's doing, I I don't sell it outright, but I'll sell a couple of covered calls on it, make some extra money. So that's sort of what I've been doing. Royal Bank, CIBC, CNQ. I did that. I have one out right now. Prior to that, I did it on Sun Life and a couple others. So I just kind of use options to just to say I think this is getting overpriced, and but like taking a profit isn't bad, but I got dividend payers, so I'm getting dividends coming in, so I don't need to sell them. There's of course folks which are growth investors, and if they are retired, for example, or not working, then they need to sell a couple of shares. So it'd be better to sell ones that have appreciated a lot rather than to sell, it's something that had just tanked. So I hope I answered your question. Bibby says I would add a disappearing Alibaba CEO, yeah, as an additional knock on China individual stocks. He ran his mouth, Jack Ma did, and the government basically was like, yeah, we're the ones in control. We don't care if you're the CEO and owner of the biggest Chinese company. We're in charge. So he got a talking to. Yeah, don't do that. Like, know your environment, right? You're in an authoritarian, I didn't pronounce that correctly, regime, and like they can make you disappear. Yeah, in the US, you can. Like when Jamie Dimon talks, like everybody listens, like he's, people want to hear his opinion, and he'll say what he thinks, right? Whether he's right or not is a different question. Of course, it's all a little bit colored, but yeah. See, he complained against the government, basically complained against the regulators. Um, if he took a shot at another company or something, I'm sure nobody would care. But the government needs to be seen as being in charge. Whether they actually are or are not, the perception has to be there, and if you challenge them, they will come down. Um, I mean, just when they suddenly discovered that their population was decreasing, and it's like, well, why aren't people having more kids? Well, it's because, first of all, there was the one child policy, which I think they pulled back even before then. And it's like, well, kids are expensive because of the schooling, and then they came down on all the tutoring and remote learning companies and basically devastated them. So they can do whatever they want. Um, so, which is why companies in China are fairly reasonably priced, because every so often the government does something like that. I mean, even before the war, Russian markets, their PEs were in single digits because people didn't want to invest there, so everything is cheap. Because every so often their investments disappear and everything becomes property of the state. So that's what happens. There's extra risk, and the market prices reflect that. In the US, regulations are coming off, and that's why the PE is like 24, 26 for the S&P 500. Anyways, um, I went off on a tangent, Bibi. I hope that was interesting. Rand says, do you write off margin loan interest on your taxes? Abso-freaking-lutely. Yeah, so for those who don't know the rules for being able to write off interest, and it's just a tax deduction. The interest isn't free, just to be clear. Number one, you have to be borrowing to invest. So like you can't borrow to go on vacation and write that off. It'll come out in an audit. Number two, it has to be in a non-registered account. You can't do it for an RRSP. I wonder how many people don't know when they're getting an RRSP loan that the interest isn't tax deductible, because there's already tax advantages for TFSA and RRSP, so it has to be non-registered. So prototypical one would be borrowing to buy an investment property or rental, right? And then there has to be, I'm not quite sure why this rule is in, but it has to be either have some sort of cash flow, have some money coming out of it, or have a reasonable expectation of a cash flow, which I find really interesting. So obviously rental, my dividend payers, all of them eligible because there is cash flow coming. But for example, gold would not be, because gold is never ever going to pay dividends. Buying land out somewhere, if you got audited, I would think that they would not accept that. But if you buy a piece of empty land and you can show, here's the architecture plans to build a home, which I plan to rent out, that I would think that would be eligible. So that's kind of an interesting thing. Obviously, it only comes into play if you get audited, right? Okay, Bibi says China is still have massive rural population. They can draw on that for bodies for the workforce. Yeah, it's so you're right on the supply side for the labor, sure. And I mean, there's still poor people, and there's still a lot of people living in the not urban areas. But there's quite a few people that move to the cities, and maybe their wealth has improved somewhat. But I'm getting more at not having more customers to sell to, like a company that's trying, and China more is somewhat insular, and they are trying to transition to a consumer economy, which is the interesting thing, right? Up until then, up until recently, they were just trying to be exporters to developed countries, but now they want their own people to consume the goods, and if the number of people is not increasing, or is actually decreasing, then it makes it harder for existing companies to make more money. Because don't forget, without PE expansion, if you're not making more profits, your share price isn't going up, right? Like share price can go up whether people feel more optimistic, so the PE goes up even without the earnings having gone up, or your earnings need to go up with the PE staying constant, and that's what makes the share price go up. So you need to make more money and have more customers is a great way to go about that. And then Bibi says that the part that scares me in case of conflict, there's no real ownership of Chinese companies. You basically buy an ADR in a company domiciled in Bahamas, I believe. Um, I checked remember when there was that fear that the Chinese ADRs were going to get delisted when they weren't cooperating with auditors and regulators and so on, and then they basically said, no, we want to cooperate. But so like the ones that I have, they trade on Hong Kong, and actually through Interactive Brokers, which it's kind of cool. You can get stocks anywhere around the world pretty much. Like if I wanted to buy Mercedes in Germany, I could buy that directly. They're also very good. Interactive Brokers is about currency conversions, that they give you the true value with like a $2 fee, $2 period flat fee. So if Tencent, Alibaba, Baidu, if they got delisted, the ADRs, then I would actually be able to get the equivalent shares on the Hong Kong exchange without paying anything extra. So I wouldn't lose them, which is kind of cool. Being able to buy anywhere around the world to me is kind of cool. Never really got around to it. It's hard to do research on a random company in Japan. So yeah, I don't think you would lose all your money with the ADRs, even in time of war, presumably, which isn't like again not what anybody thinks is going to happen or hopes. Rand says, can I create a corporation in name only without selling product or service and invest within it? I understand your corp is legacy from your consulting days. Yeah, great question. So yeah, you can create a corporation anytime without having a reason to. When I did mine in 2009, so 16 years ago, I got a lawyer to do it, and it cost $1,000. It would probably be at least twice that. But back then they said you could do it online for, I want to say, 2, 3, 400. So if it's not complicated, if it's just you or you and your wife and you each get half the shares, then you can get incorporated yourself. The thing is, once the corporation is live, you have to pay. It's provincial, at least mine is. I didn't know if you can do anything else, frankly. So I have to pay Victoria like $46 a year, and then I need to file taxes. And like I don't even do my own personal taxes. They got a little simpler since I sold the U.S. real estate, but corporate taxes require quite a bit more, and like I'd rather pay my accountant a grand a year. So once you get the corporation going, you either lose, like if you stop paying your provincial capital, or you don't file the taxes, they'll shut the corporation down for you. But then you just lose out on whatever it costs to get it incorporated. The other thing is, corporations are great for active income. Okay. So if you're contracting, whatever it is you're doing, if you're selling a service or a product, like that is, as long as the money comes into the corporation and stays there, you just pay 10%, give or take, depending on your province, and that's all the taxes you pay. Generally, then the corporation gets a brokerage account in its own name, not in your name, in its own name, and then you invest. But passive income, whether capital gains or dividends, is taxed heavily. So I would not suggest, Ranch, getting an corporation for investing, unless there's something else that I'm not aware of. Everything for the corporation is in the highest tax bracket. So, like personally, you get taxed a little bit on the first 50,000, a little bit more on 50 to 70,000, and so on. You go down the tax brackets. With corporations, passive income is always taxed at the very highest, worst for you tax bracket. I know they took off the inclusion rate, and it's back down to 50%. So basically, capital gains, you end up paying 50% is the worst tax bracket, or 53, depending on your province. And then the inclusion rate is half that. So it ends up being, let's say, 25% of the capital gains gets taxed. Dividends don't have any inclusion rate. They're included fully. And so you're basically paying 50% on the dividends in taxes. So I sort of, there's one exception where if you have Canadian eligible dividends, which I've been piling into in my corporation, you can, it's called a GRIP account. Don't ask me what the acronym means. Google it, GRIP. You can basically convert the dividends that your corporation pays you personally as the owner. You can convert them to Canadian eligible dividends. So therefore, you're sort of passing the Canadian eligible dividends from the investments through to the owner of the corporation, and then they get taxed in the increasing tax bracket. So then that's a little bit better. But like foreign dividends are brutal in a corporation. So I know there's a few little tweaks that accountants can make, but corporations are not great for investing passive income. Okay. All right, back to Bibi. Ooh, you own the shares of Hong Kong. I don't. I own the ADRs. My point was that if the ADRs got delisted, I would be able to pick up my shares on Hong Kong just by saying I had the ADRs that got delisted in the US. So no, I don't. I mean, it would be extra complications. My point was, or part of my point was, that Interactive Brokers are kind of cool in that you can get stocks all around the world, while Wealthsimple, Qtrade, that I've been exposed to, probably the same for the others, is that you can buy TSX, Venture, NEO, or what is it, OBCE that it became, and then NASDAQ and so on, New York Stock Exchange, and that's it. Like Canada and US stock exchanges, you can't buy something, like I said, Mercedes in Germany. And Bibi continued, I never considered anything other than Vanguard for Asia. Very interesting. Yeah, like I have VEE for emerging markets. As I said, though, I really have no way of doing research of anything outside of Canada and the US, right? Like I guess language barrier would be number one, so maybe I could do Britain, but I don't know the stock market. I wouldn't even know what PEs to expect and so on. So I will let either actively managed mutual funds do that for me and let them do the research and charge me a MER, or do like an ETF using an index, which is just as good. So yeah, I think I'm doing the same thing. My point was just that with Interactive Brokers, I could pick up those shares if they got delisted in New York. So, right. Any other questions? Oh, hope everybody's doing okay. Bibi says, somehow I feel Japan will be breaking out, but I have no basis for that conclusion other than gut. Yeah. I mean, Japan since the 90s has just been a dark, deep well of despair. I know they finally they already had a bit of a breakout, and I think they got back to even where they were in the 1990s, but basically 30 years of nothing. At a market level, I'm sure individual stocks did better. Japan is never going to be somewhere where I would invest intentionally. They're usually a tiny percentage of the various indexes, um, because their demographics are like ultra developed markets, basically, right? Like Canada and US population would not grow if it weren't for immigration. Japan refuses immigration. Having traveled there, they don't like foreigners, at least that I've been exposed to. So they're definitely not going to allow immigration, or not much of. And their population is old, and they don't spend, they save, right? So again, growing growing your sales in an environment like that is just not great. Now, of course, like you got Sony and Nintendo and so on, so like they obviously they sell outside of Japan, but anyway. So yeah, Japan is an easy exclude for me. Um, uh, Maybe your gut notwithstanding, but they already had a little bit of a run up a couple of years ago, I want to say. Rand says, how come you got out of US real estate? Oh my God, how long do you have? Oh, wait, I'm up to date. I can. Uh, would a high USD and low Canadian, it would have been good passive income? Um, yeah. So I shouldn't complain too much about the US real estate. Um, so I started buying in 2009 and bought basically a house per year. Started with one in Phoenix, second in Phoenix, and then switched to the third and fourth in Las Vegas. Bought them for 88.95, 110, and 140 US. And for one of them, I remember the Canadian dollar being stronger, that a Canadian dollar bought a dollar 10 US. And got the renters, no problem, all professionally managed because like I wasn't going to do it remotely. Never saw any of them either. Didn't fly down because I'm not a good flyer, and like what was I going to do? Climb into the attic, and you don't really know how good the neighborhood is without spending time there. And like I wasn't going to take a week off of work to hang out in an unfurnished house, and you know. Um, so I bought them with cash because at that time they wouldn't lend money to foreigners. I bet they certainly do now, but I think it would be costlier than to a local. Um, but then problems started happening and just annoying things. Um, so like even just getting repeated pictures of the weeds in the front yard, or the garbage cans not on garbage day out front of the house. Take a picture, and they would send snail mail because it's a homeowners association. It's kind of like a strata in Canada, except it's even for detached houses. And they were all detached, beautiful houses, gorgeous houses. Um, so it was frustrating. There were a few disasters, which I'm sure any homeowner or especially landlord is familiar with. I had a flood where the 3-story house, the very upstairs toilet overflowed, and instead of reaching back and just turning off the water, the renter actually left the property and the water just ran down. The property manager estimated the damage for 7,000. The renter actually paid for it. I don't know whether they threatened her to go to court or whatever. She actually paid, and then the renovations were getting done, put a fan on it, pull all the carpets and that. And they were asking for more money, and I'm like, well, the renter paid you, right? Well, by the time you move the furniture and you pull the rugs back, it's now 14,000, and that, so it was like a half a year's rent gone. Another house, was it the same house? Something was cursed. They were both in Vegas. Had a bee infestation because somebody didn't close the roof, and the bees kept coming back in until got an exorbitantly overpaid construction slash exterminator who got rid of the nest and closed the roof. And I felt so sorry for the renters because the bees were inside the house. They had to put towels underneath one of the doors of the bedrooms because the bees got in through the window, through the walls. Just it's just out of your control. And the thing is, you're just going to expect just to collect the rent and nothing bad to happen. And air conditioning breaks $5,000 emergency, because in those temperatures in Vegas or Phoenix, like, it's a life or death. And because I kept getting the letters and kept getting emails, like, I always kind of felt like I was, like, it wasn't a lifestyle thing, and I wanted to travel a little bit, and I couldn't leave because of the stupid letters with weeds in the front yard. I got a couple of fines from the homeowners association just because the property manager didn't do their job, maybe, arguably. So basically, I'm like, yeah, you know what? Because there was no leverage, because I paid cash for them, uh, I was cash flowing, obviously. Like, if you can't cash flow something that's paid off, you got a problem. But it was basically 2 or 3%. I had to deal with the IRS, had to do U.S. taxes, had to get a U.S. accountant, and I just started selling one per year. I'm like, we're going to get out of this. The U.S. dollar did get stronger since. I mean, who knew, right? Like, and compared to Canada, I think stuff there cash flows. They actually have the 1% rule in the US, which means that the rent per month has to be 1% of the buying price, which means 12% of the buying price annually needs to be in rent, which in some cases, I think I was. But in Canada, they laugh at you if you mention the 1% rule, because, like, that's not a thing. You're generally subsidizing the renter in Canada, especially Vancouver and Toronto. So I just wanted it done and over with. Stop doing U.S. taxes. Stop having to phone IRS, be on hold for two hours. Stocks made more money. I didn't mind the volatility, and every time I got a picture of the freaking weeds, I'm just like, no. One time the property manager went out there. It's like, yeah, there's weeds in the front yard. I'm like, hey, can you pull them out? Just because nobody else seems to be, since you're there. Just like, I don't think he did. It's like, probably not my job. Well, great. Yeah, I think that depending on other people directly, like, I know obviously with stocks that I'm depending on the employees of the company and so on. So yeah, they cash flowed, but it was 2 or 3%. I mean, if I had put 20% down, um, it would be returning cash on cash would be 5 times that, so it would be 10 to 15%. So now we're talking. But if I was also paying 5, 6, 7% interest, that wouldn't be quite as good, and then they wouldn't be cash flowing. So yeah, for me, it was more of a lifestyle thing. and I gave it the old college try. Sold the last one in 2023. Bought the first one 2009. So like I gave it 14 years, and I'm just now, to be fair, they appreciated times three. I sold them like in the 300s. Maybe the first one might have been like 270, then I want to say 295, and then it was I think 340 and 380. So like they at least tripled in value. Like there's no, don't feel that bad for me. So anyway, Rand says, so Ranj, I hope I answered that. It was more of a personal thing. Stocks will outperform real estate over the long run. They'll just have more volatility. I don't mind the volatility. Like one of my portfolios that I keep open has like 3 million in it, and like I'll lose 30,000 in one day, and it does nothing to me. And get one more letter with a picture of the garbage cans. Nuh-uh. Rand says a lot of YouTubers are recommending it. Canada's too expensive. Yeah, yeah. Like the houses in the US are a lot cheaper. Like I considered trying to maybe keep one and be a snowbird, and I'm just, oh geez, now you have two, and then it's like it's empty and it's not insured. Like some insurance companies won't insure something that nobody's living in for theft or whatever, right? Um, and like because being a bad flyer, I didn't really feel like flying back and forth, and I actually like the cold. I even moved to Edmonton. Those of you who aren't following me. Yeah, I think the US has been, I mean, like I bought them at the very rock bottom. Like two of them I bought from banks, right? The first two I bought from banks. Um, After their 2008 crash, like it was a no-brainer. Like everybody who was living in them, like they're gonna have to live somewhere. So I think the U.S. has been cheaper than Canada for ages. Um, you need to go where there's money, where you can make money. Like it's cheaper to have or not cheaper. It's easier to have a rental three doors down from you. But if you're subsidizing the rent or you're subsidizing a total stranger, like that's not all that good of an investment. Canada is too expensive. I guess it also depends on where, but maybe in general. Joey, thanks for being patient. Where did your initial income come from that you invested in stock? So I was lucky in that I started investing when I was 23, like literally second job out of university, and the first job lasted about 4 months. Second job out of university, a financial advisor wandered into the office. I I don't know whether they asked him to or whether he he was trying to drum up business one way or the other, but whether it was like part of the compensation, it didn't sound official. Um, and I was lucky enough that I got my bachelor's degree. I had a scholarship and I lived at home. So I actually, and I even worked a couple of co-op semesters. So I had about $20,000 to invest. Started learning about mutual funds when there were miscommunications as far as fees and other things. Um, and I started working in IT. So I was making really good money. Uh, and I was sort of investing all along the way. Bought a house in Surrey, British Columbia for cash. Um, and I had about 2007, I started investing in individual stocks that didn't really pan out. And then 2008, everything crashed. I had just invested 200 grand into mutual funds and it became 130. And then I bought cheaper and better performing do-it-yourself mutual funds without the aid of a financial advisor. And then I kept learning about stocks and it eventually got a little bit into private equity as well as a diversification. But Joey, it was working in IT, making good money, being really stressful, and kind of knowing I have to stop. And I hadn't really heard about FIRE or even FI. So FIRE stands for Financial Independence, which is great. Retire early, like if you're in your 30s, you don't want to sit and watch Netflix for the next 50 years. Um, so I just kept learning, but then I became incorporated in 2009 again for work, and then taxes just became negligible, which was great. And I just kept investing. And at the last contract, I was making $95 an hour, which translates roughly to 190 grand a year, taxed all of it at 10%, right? Compared to the increasing percentages if it were personal. And I was still living on 30 grand because I had a paid off condo. And so I was investing literally 85% of my income. And that's how I bought the stocks. Okay. Colin says, "Yo, American here. Well, welcome. Happy to see the chance to talk to a Canadian about this. What's your view on American real estate? Will it go the same way as Canadian real estate?" I mean, there's checks and balances to everything, right? Like the real estate in Canada is very expensive, but especially in maybe the major cities, the salaries are heftier. But in the US, like if the average salary or wage, I seem to recall like in the 50s, maybe between 50 and 60 grand. If a house is 400,000, like that's pretty expensive already because you're now having to work 7-8 years in order to buy that, and that's without taxes. So like it used to be 4 times, so it's definitely gotten more expensive as it was. Will it go higher? Yeah, but real estate appreciates roughly at the rate of inflation. Like people in Vancouver or Toronto, like they've seen plus 30% years, but now you've had 2 years of flat or down. Eventually, like over a long period of time, like 50 years, like it just goes up at the rate of inflation, 3%. Some of it is being done artificially, where it's like, yeah, I don't want condos or high rises built in my neighborhood, and that's the rich old people saying it, and that's who's on the city council or has the ear of the city council. So some of it is artificial. The US seems to be cheaper than in Canada, but also Canadians are heavily in debt while the Americans deleveraged back in 2008, basically, while Canada is happily going back up. Consumers are heavily indebted, and it's hard for them to afford anything as expensive as Canada. But yeah, your real estate will go up as well. And then, okay, and Joey says, "Would you recommend paying off a house or keeping that money in stock? I have maybe 100K in stock. I don't need to worry about retirement. I have an index pension." Wow, good for you. In my late 30s. I would always pin it to what is the interest rate on your mortgage. And I know in the US, are you in the US? No, it was Colin who's in the US. Joey, so if you're in Canada, you don't even get to write off the interest. So it depends on the what the interest is. Like the market will get you 7, 8, 9% on the average, but there's volatility. So if you have a 6% interest rate, which is for sure, as opposed to plus 20 1 year and minus 10 the next year, um, or if you don't like debt, and maybe because you're asking, that would be that would be a question answered. Uh, then if you have a fairly high interest rate, then you might want to pay it off. If you got 2.4%, which I remember there being, um, then I would say you can beat that over a 5 or 10 year span with the stock market. Now, if you are American and you get to write off the interest on your primary residence, you say off a house. So I mean, it could be an investment property, and then you get to write off the interest for sure. Then that obviously helps you. So if you keep it, you could probably do a 7% interest rate if you can write that off, and still feel that the stock market will beat that. Colin says exactly my perspective. The rental market definitely depends on inflation and salaries. I really like REITs, but your advice is really helpful to me. Thank you. I think Americans will follow that. Okay, hold on. The part of the high inflation was definitely housing. Like it had the rental rates came up. Even when I was selling the houses in 2023, when I was selling the last one, the rents really came up. To be honest, if there was a renter there, and if my property manager was haggling a little bit over the rent, I'm just like, hey, listen, if they leave, I might have to repaint the place. It's definitely 1 month of no rent. So that's 1,500, 1,600, 1,800 that I miss out on. Leave them there. If you're arguing over $50 a month, leave them there and I'll come out ahead. So yeah, REITs are fine. It depends on what it is. I think the office space is still a little bit in question, and retail space, like it has to be good. If they own um, bad retail facilities, then that REIT may not be the best. Colin says, don't pay off your house. You already paid the principal. I'm not sure what that means exactly. I mean, you have to pay both the interest and the principal. Joe's in Canada. Okay. Yeah, so I think I covered that. Bigfooter says, I hope you're doing good. Yes, I am. Thank you for asking. Just wondering about your thoughts on National Bank. It had a bit of a drop today after earnings report. I don't own it. I own the other big five. Let me take a quick look. Where are we? I kind of like all the Canadian banks, to be perfectly honest. I just kind of look at it that at least the big five, and you can include National in there. Is it NA ticker? Yep. I remember tickers for stuff I don't even own. Yeah, it had sort of been trending down since December. It had a nice run up. Let's face that. And then it dropped. So I didn't hear what their earnings announcements were. I mean, they didn't make their numbers. Maybe they had higher than expected withholding for bad debts that could have caused them to miss their numbers, and that shows additional risk that investors don't like. I mean, it's not a small company to drop 5.5%. Wow. It might be that they're more affected by tariffs than maybe some of the others. Arguably, Bank of Nova Scotia is one of mine that will have uh, impact from the tariffs. National Bank could be another one. But I mean, like PE of 12, they're not cheap, but they're not prohibitively expensive. They're not maybe yielding as much as some of the others. I might look at it tomorrow. Like I could see them going back to where they were in November, December. Otherwise, you're just kind of collecting the dividend. Let's see. Morningstar thinks fair market value. When was it? From January, they think the fair market value is 110. So they're over that now. Desjardins, which is usually more optimistic, says 140. Yeah, I always like stuff that drops because people usually oversell. They just like I'll read what their announcements were, but like they're impacted by macro issues, the same tariffs, maybe a little bit of who's going to be the next prime minister and all that, but yeah, that might be an opportunity. Like they're not going to go bankrupt. That's kind of how I look at it. Joey says mortgage rate is now at 4.6. Yeah, I'll take your word for it. Yeah, if it's 4.6, then like I said, 6% interest is sort of where I draw the line. Above that, pay it off. Below it, the market can probably outperform 4.6%. If you want to make yourself feel better, buy stuff that pays dividends that will at least cover some of that 4.6 and stay invested. That would be my suggestion. Bigfooter says they also completed a merger with Western Canadian Bank. Okay. I don't own them either, so I wasn't aware. Was it WCB? No. Western Canadian. Are they still around then? February 19 is the last stock price. Okay, cool. Well, there you go. You get two for the price of one. Western Canadian, if memory serves, was more commercial, which is fine. Like they didn't really have all that many branches. Okay, Colin says I meant interest might be too late. I'm dyslexic. But in America, you pay off your interest disproportionately before even putting a dime. Yeah. I sort of heard that too. Like that seems strange, but I'm in, as far as I know, in Canada, it accumulates as you, with time. Like you can't be paying off interest that hasn't happened yet. Like I understand why they want to keep the principal as high as possible because that gives them more interest. I know, and again, this might be a US thing, that if you want to throw extra money into a mortgage, you need to specifically tell them this needs to go against against the principal, I don't want to be prepaying interest, which again really sounds like an odd thing. Maybe that's just an American thing. Colin says Procter and Gamble has been my favorite American stock if it matters. Well, that's good. That and Johnson and Johnson are cyclically proof. They PCG. They their products are usually needed no matter what the economy is doing. Oh, they took a bit of a tumble, didn't they? Not much of a dividend. P of 13 seems reasonable. I'm assuming a bad quarter or something that caused that back in January. I got some price target hikes. Well, it's definitely had a long run up since COVID when it was like 8. So it's doubled. Yeah, it's not going to do anything magical. That fall though is kind of concerning. PG&E. Oh, PCG. What are, yeah, PCG. Oh, PG&E. Okay, what am I doing? You're right. I'm sorry. You're right. I thought it was Procter and Gamble. It is a transmission and distribution of electricity. Okay, never mind. Never mind. Well, still. Okay, so utility company. Yeah, they've had a decent run up since COVID. Okay, got it. Thanks, Colin. Negat says, can you please look into SMCI? SMCI. Is that the one that had the auditors leave in a huff for a tech company to have a PE of 22? Yeah. Kind of feels like there is actual underlying problems. Look at, oh, there's nothing from there's nothing from Morningstar. Yeah, I mean the numbers look good, so it feels like it's an opportunity, but it could also be a value trap. Negat. Sorry if I'm pronouncing it wrong. It's not something I'm gonna pile into. But they're profitable and like they look cheap, but I don't know what the end result was of that problem with the regulators and like what they were fibbing on. Colin, when they make more when they make more stock, is yeah, they're devaluing the stock. They're putting up more shares with the same underlying assets. So that's devaluing the stuff you have. That's usually not popular by, and it's also making the earnings per share less the next quarter. So it's definitely not popular by investors. So if they're doing that, that's not great. So they put out more stock. Yeah, for sure. Is after today SMCI a buy? Well, it would have been a better buy yesterday before they went up 12%. I don't. Did they put out? I didn't see a warning that they were putting out quarterly results, but that would make sense why they went up so much. Again, I would, with SMCI, I would want to get to the bottom of what caused them to crash in the first place and make sure that that's not an issue anymore. Like generally, your auditors walk away as as a form of protest and to raise a red flag because the CEO, CFO was asking them to sign off on something that would ruin their reputation. Um, so yeah, Colin, this is Canadian Money Talk. If you're still on, um, you're you're welcome. I'm okay with it. It's good business. Yeah, yeah, that was the utilities company. Um, Utilities may be a little bit cyclical, but they benefit from lower interest rates, which we in the US you had a bit of a pull down in the interest rates. But they're not going to go down anywhere as much as the Canadian ones because our economy is a little bit weaker and our inflation came off a lot more than the US. So um, an American utilities company, presumably CPG again? No. PCG. Um, how much debt do they have? Yeah, utilities, because they usually finance all of the infrastructure, they usually have more debt than the average company. Their debt to equity ratio is 1.9, so usually under 1 is what I prefer. Colin says America is a nightmare economically right now. I gas went up to six bucks. Okay. Um, yeah, in Canada it's not that bad. Yeah, you guys still have inflation going on. I really like BCG. They own most of Northern California. There you go. And then Baby says maybe $6 gas will get that Keystone XL built, the pipeline. I'm not still convinced that even with a change of government that you're going to get much in pipeline building, but hope springs eternal. Because you need all the states that it goes through, you need all the provinces it goes through, all the stakeholder groups to agree, and they might just not want it, and they'll try to veto it or at least drag it out, or they demand favors payment, whatever it is. So yeah, pipelines, like Canadian pipeline companies have been doing really well. Despite this being a problem, Canadian oil companies not being able to get their products to market other than the US, um, it's just politically bad to build more pipelines. Maybe Trump will cooperate a little bit more, but then the state governors don't have to. And, if we get a conservative government, maybe they'll be more on board. Who knows? Nigat says, would 10% tariff on China from Monday affect Amazon and Alibaba? Um, so the tariffs get paid by the importers. So the 10% tariff, goods coming from China into the US would get an extra 10% that whoever is buying them. So whether that would be the end user, uh, or the import company, they could be, they maybe, I mean, it's a supply and demand with Alibaba and Amazon. So like, how much is something supposed to cost? Like I'm looking at, um, I was when I was a kid, I watched Robotech or Macross, so now I'm looking at $200 toys from my childhood. So whether they're 200 or 220, like so they might just add that to the price, um, and or actually subtract it. So if it's sorry, subtract it, it would be cheaper. Um, so they might charge 180, and then if I were an American, and then it would still come up to 200. More likely than not, I would end up eating it, and then that causes inflation, um, and or me not buy that. So from that perspective, it could affect Alibaba. Amazon, if it's shipping stuff out of the US, shouldn't. If stuff is coming into the US, then it would. And again, who's going to pay the 10%? Is it going to be the producer, meaning they have to lower the price, or whoever's importing it, which would be me with my toys or company. So yeah, it affects it. Um, it's economically inefficient, basically tariffs, because you're supposed to produce goods wherever they're the cheapest to produce. Um, I mean, what the tariffs could ultimately do is cause more production to happen in the U.S. or all production that the U.S. consumes. Oh, hi Goose. I got a dog. All production that the U.S. consumes might happen in the U.S. If it went to an extreme. But then U.S. people don't work for as cheap as Chinese people, and so everything would be way more expensive. So whether it would get passed on to the consumer or not depends on the item, or whether the producer and the consumer split it, etc. Bibi says, in my view, like it or not, Canada is a petro state. I mean, all we have is financials, energy, and materials. So we do have some. We have the oil, which is the petro state that you mentioned, and I mean, we do have some other stuff, materials, copper, gold. Resources is what we have. Yeah, unfortunately, it would be better if we were added value country where instead of shipping lumber to the US for them to make the furniture, if we made the furniture here, it would be a lot better. I can understand why we're not taking advantage of this. Um, well, I mean, we're not. That's what I don't like about commodities, is because uh, anywhere around the world where they're found, they're getting the exact same price we are, pulling it out of the ground, like the copper or whatever. Um, so we can't have an economic moat. We can't keep out competitors just wherever there's the next mine. So it we can't affect the price of gold and say, yeah, our gold is now going to be 400 or 4,000 an ounce. Like, we have to take the world price. So, Bibi, I don't know if there's much to take advantage of, in all honesty. Anyways, Colin says California needs water pipeline. Yeah, Canada has lots of water. That was something many years ago that we were. I think there's still ETFs that kind of focus on maybe just water, cleanliness, um, getting it to where it needs to go. I don't think it's really become an issue. Like, I remember listening to prognosticators saying, she just lay on my yoga mat. There's prognosticators saying that there would be wars fought over clean water, and we're still not seeing that. Um, Colin says the tariffs affect the distributors in my mind. Well, they affect the importers. Now, whether the importer has the power to say to the distributor or the producer of the product, I'm I'm going to have to get you to lower your price so I can pay the 10%, 25%, whatever it is. Most stuff gets touched at least 3 times. Like cars, I know go back and forth across the border multiple times. Um, like it just becomes a mess. And I manufacture in California, for example. The Portland is getting more expensive, and so is the sand. Okay. Yeah, it's tricky, and like I'm still thinking, especially after he said, oh, now instead of 30 days, now they have until April 2nd or whatever. Like he's just losing credibility, and it's just obvious he was just pulling an ace out of his sleeve and saying, here, I'm able to force you to agree to whatever conditions I have about. I don't even think with Canada, especially, that it's about the drugs coming across the border, because it's a tiny percentage of what's going into the US. Um, it could just be psychological, and he just wants to win for himself. So did no illusions about wanting to win for the country. The whole thing with Putin is disturbing, by the way. It's amazing, like one guy who got voted in because inflation was high. That's, by the way, Colin, why you guys have a change um, in government, was because people think, well, the current government isn't keeping prices down. Not that any government can. Trump said so many times he was going to bring down prices, especially stupid eggs. Um, and like he can't. You can't. That's just inflation. It's free market. Uh, and people said, well, Biden wasn't doing a good job, so we're just going to vote the other way, or the 10%. That's the actual deciding vote. Like there's 45% of the population is always going to vote Democrat, and 45% is always going to vote Republican. Um, and like people didn't look that he wasn't a very nice person. They didn't care. They just like, okay, next. Statistically, except for Obama, like the last 10 presidential terms, the next one was always flipped, because there was always something wrong with the economy that was affecting people personally, and they don't vote for the ethical person, the nice person. They just think this person's going to fix my problems, and they don't. They just lie to you so they would get into power. The fact that we now have 4 years of this is interesting. Then compounding through the chain. Bibi says there are tools for government to create a moat: carbon moat, human rights moat, environmental moat. Yeah. I mean, regulations can, but governments shouldn't play favorites. They shouldn't be deciding which company is going to win, like subsidizing Air Canada, subsidizing Bombardier. Like if the company doesn't deserve to survive, just let it go. Don't feed it money. Various laws, I guess, can sort of affect things, but moats are usually natural, like Coca-Cola brand, BMW brand, Mercedes brand, railways. It's like no way to build another railroad across the vast distances. So that's usually what a moat is. Nigat says EPD stock is bullish. EPD's Enterprise Product Partners. P is 12, so that doesn't sound that bad. I think I had them. I don't anymore. Um, nice yield and 77% payout ratio. Like they don't seem expensive. I don't know what their average PE over the last 5 years would be, but um, they don't seem expensive. The other thing is they're adjacent to oil producers. Production and trade of natural gas and petrochemicals. So they also do pipelines and so on. They don't just get it out of the ground, and so they're they might not be as heavily affected as a producer would be if the price of oil goes down. So they're not bad. Definitely nice upward trend. I would, Bibi, I'm not going to do it now, but I would check what the average PE is for enterprise product partners because right now they're sitting at 12 and change, which, if the average is 8, then they're overpriced. But if the average is 15, then we're still doing okay. Their sales year over year, I guess the last 2 full years have come up, but 2022 was a very good year and it dropped in 2023. Solidly profitable. Yeah. The last 3 quarters, sales have been increasing. I look at sales because you can lay people off and then that improves your net income, your earnings, but sales are a little bit more organic. So I always try to have increasing. Even the last 3 quarters, even earnings have been increasing. Yeah, I don't think they're bad. I think they're not bad. Like I said, I think I owned them. I remember. I think it was them. They're a limited partner corporation. There was something about tax withholding, and nobody could tell me what it was actually going to be. There was something new coming out, and I'm just like, I don't want to do U.S. taxes or anything like that, so I just sold them. I didn't take the chance. Bibi says, but I agree that toys are made with lead paint and ultra low labor and cheap. Yeah. Hold on, I have to open the door to the office for the doggo. She left the office for literally 2 seconds and then plowed back inside through the door. Anyways, Colin says, I hate Trump. Yeah. The fact that you guys elected him a second time, I have no words for. Like I said, they don't look at the character of the person. People just say, well, my life isn't as good as it could be. This government apparently didn't do what I wanted, so I'm going to try the other government. And it just they just switch. Obama was the only one. So, like, inflation isn't really arguably anybody's fault, certainly not the government's. If they get rid of it, it was a coincidence, and it was, if anybody got rid of it, it was the central bank raising interest rates. They'll take credit for it, but they didn't remove inflation, and they certainly didn't create it. Arguably, supply chains and the money printing back in 2020 and 2021 in order to keep the economy moving is what created the inflation. It was the right thing to do. You need just stay here. Okay. Yvonne says, me too. Yeah, me 3. 4 more years of this guy. Oh my God. And all the crap about taking over Greenland and Canada being the 51st state. We're a sovereign nation. Like I'm hoping that UK would come to our aid or something like I. That's so ridiculous. And the guy's just spitballing, just talking, like absolutely just just making stuff up as he goes along. Oh, sorry, EPD was okay. Well, anyway, I answered. Yvonne says, would investing in Europe be the solution? Um, yeah, Europe, I think, has some opportunities. I have a little bit of stuff in Europe through a mutual fund. Um, like they've had some tough years there. The problem with Europe, especially developed Europe, is that again their population isn't growing. Sorry. If it wasn't for immigration, developed world in general would not be growing in population. So like I'm more about emerging markets, but Europe, because it's down so much, I think there are opportunities there for investing, Yvonne. So yeah, I will certainly take a look. Ba-ba-bum. And Colin says, I think the Singapore economy, I was in Singapore, and Sweden would be the best diversification off the continent that won't drop overnight no matter what happens globally. Singapore is tiny. Sweden isn't much bigger as an economy, not as a um, not as a land space. But why did you Colin, why did you pick those two specifically? Like, why not, let's say, Norway versus Sweden? And why not Malaysia instead of Singapore? Like, Malaysia at least has a hefty population. Nigat says, how a buy right now? HAL. Let's see what that comes back with. HAL. So I'm going to say well, you have to tell me, is it Halliburton or is it Global X Active Canadian Dividend ETF Trust? Which one would you like? Because one is on the TSX, the other Halliburton obviously on New York. Which one? Halliburton. Thank you. I usually on the TikTok lives, which happen alternate Wednesdays, I insist on the name and the ticker because otherwise I'll talk about the wrong one. Wow, they've taken a bit of a header. 2.6% dividend. Drilling evaluation. So, oh yeah, energy. Okay, got it. Well, they look cheap, like a 9 PE. They're small, wow. Or smaller than I thought. Well, single digits PE, I mean, they could go down some more, but not a heck of a lot more. They're sort of back to where they were in 2021. Let's see. Payout ratio 24 is fine. Their cash flow covers the dividend 7 or 8 times, so that's safe. They've been raising the dividend the last 3 years, but looks like they cut it 4 or 5 years ago, which isn't great. Maybe during COVID. Return on equity is 25. Their debt to equity is manageable. Let's see what their sales are doing. Yeah, the last 2 years the sales are down, and so's the profits. But if you squint a little, the last 4 years the profits are increasing. And then quarterly, yeah, flat at best, downward trending actually. For sales, and then I mean they're profitable, it's just not increasing. So that way your share price won't grow unless people become more optimistic. Morningstar thinks fair value is $36. They're at 25. Yeah, they can certainly get cheaper. I don't think they're going to get much cheaper, and I think there is good 30% upside, 40% even. So maybe start buying them in thirds or quarters of how much you want to have eventually, and if it goes down some more, just keep buying. It can go down some more, but not a heck of a lot. Okay. So Colin says, to my question about Singapore, Singapore's wealth and strong currency stem from its intelligent approach to trade and fuel tanker management. Okay, you're looking at it that way. Its strategic location and policies, it's strategically located for centuries, for sure. Policies have helped create a highly educated and affluent population. I spent like a week there. I flew out of there, going back to Canada. Came through Malaysia. Okay. I think my point was more that it's not a big economy. Same with Sweden. Like the population just isn't there. They're certainly highly educated. They're basically Western. Everybody speaks English. So like investing there, my point is that it's a small economy. It's fine if you think it's going to grow. Hold on. I'm gonna make a YouTube video in a few weeks about, hold on. Over the last 10 years, the returns of the world. Interestingly enough, the highest 10-year return is the NASDAQ 100 at 423%. I wanted to find Singapore, which is on a very low end. The last 10 years have done a grand total of 55%. Even Canada beat that at 82. So it's good to have an investing thesis, just historically. It hasn't really performed. Educated, definitely. Western, definitely. Yeah, fair enough. They didn't feel that rich, but anyways. Bibi says, not sure you can diversify a 30 trillion US economy using a 500 billion Singapore economy. Yeah, that's even if you merge it with Sweden. Yeah, I think that was sort of what I was getting at. They're just not that big. Like the whole island is like just a few kilometers across. Not a few, but like it's not huge. Colin says Sweden maintains a culture of currency stability, yeah, to encourage foreign investment, effectively positioning itself as a kind of international bank. At the same time, it has great positioning. Well, Colin, like you've thought it through. Like I didn't have Sweden or Singapore on my radar. So if you've done your research and you feel comfortable, great, right? I think you've given us something to think about. I'll see if I can find Sweden. I can. 67% total in the last 10 years. when it comes to their stock market. What I was saying, 55% for Singapore. Now, Malaysia, which I also mentioned, is actually negative 9% over the last 10 years. S&P 500 is 219%. Anyways, I thought that was interesting. Okay, I'm just arguing it's the most stable economy. Yeah, I'll give you that. Certainly, like as far as trade, I'm playing with the doggo. As far as trade, Singapore is amazingly positioned. Sweden not as much, but yeah, the Singapore has definitely, like, it's on the trade routes. It absolutely is. Yeah, it just didn't. I sort of have a population and demographics high level investing thesis. I want to invest where the population is growing because that makes it easier for local companies to, not growing can also mean stable. Yeah, with population, you want it to grow. I know what you're saying, but with an increasing population, the GDP grows as well, and local companies have more people to sell to, so they can grow. Sweden's population, I don't think is growing. I mean, I can Google all this. I'm not sure why. So GDP Singapore. Yeah, so 500 billion. GDP Canada is 2.1. So our GDP is more than 4 times. And then GDP Sweden. The other thing, of course, and this won't make sense for Colin, is that I'm investing in Canada because of Sweden is 585 billion, so it's slightly bigger than Singapore, and again, like a quarter of Canada's. And population of Sweden is also a quarter of Canada, 10.5 million, and Singapore is going to be a lot smaller, 6 million. Yeah. Anyway, we all learned something. How big is Singapore Island? 735 square kilometers. 49 kilometers. I was going to say 70. I think I was thinking they're 70 kilometers from the equator, which they are. So 49 kilometers east to west and 28 kilometers north to south. So it's not big. Anyways, so yeah, like if you feel they're good, Colin, you can certainly use them for diversification. I've sort of done. Nigad got tired of just tell me the stock. I sort of look at emerging markets because of the demographics, where you have a young and growing population. That's sort of what I'm going with my demographics, high level strategy and thesis. ACMR. ACM research on the NASDAQ. 222P of 17. Oh, they just had a nice 20% bump today. Their market cap is 1.5 billion, so they're very small. They beat their numbers. What do? Single wafer wet cleaning equipment. Oh, this sounds familiar. It supplies process solutions that semiconductor manufacturers can use in numerous manufacturing. So they're kind of like ASML providing stuff to manufacturers. Now, my question is whether it's unique, and it doesn't look like it is. So like anybody can provide that stuff. No dividend. Return on equity is 10, so that's not amazing. Not much debt. Buying them in December would have been better, I guess. Definitely growing sales, though. Not bad. And profitable the last 3 years. Yeah, they seem like a fairly steady company. And I mean, the amount of chips needed isn't going to come down anytime soon. Again, I would check the average PE, but I mean, even then, if they keep going up, they seem pretty decent. I like that their sales are increasing quickly, so they're a growth company, but at the same time they're profitable, because usually those two don't happen together. Yeah, not bad. Turbo Feed says donate for needy people. That's a little out of context. Nigat says after today's bump, is it still a buy? Let's see if I can find out what their average PE is. ACMR 5-year PE. Let's see. I can get that. Y charts doesn't usually let me in anymore because I used them too much and I didn't buy membership. 38.4 says full ratio. So if that's the case, I would be on board if it is actually 38. 5-year average PE for ACMR stock is 38.4. So they're still cheap. If that is true. So yeah, double check that. And how is it 5 years? Yeah, they took a beating in 2022 along with all the other growth stocks. But I mean, they seem like a legitimate supplier for semiconductor manufacturers. So Taiwan Semiconductors uses their stuff, I'm presuming, or any other manufacturer. Cool. Yeah. Like I'm not going to run out and buy them tomorrow, but I'm more of a Google or Microsoft guy, but for growth. Nagat says, so you're on board with ACMR. Yeah, let me check Halliburton again. By the way, this isn't financial advice, right? I don't have a crystal ball. PE ratio from Macro Trends. Let's see what they told me. I'm still trying to get Halliburton's average PE, but it's not working. Yeah, I know. No advice. Just confirming with you. Yeah, I'm also not a growth investor, which which ACMR is. So Colin says, dozing off. Yeah, good night, sir. Anyway, yeah, Nigat check the average PEs. That's really the only thing. Otherwise, I think all of them seemed pretty good. EPD, like I said, I owned it before. I know it came down. I sold it a while back. I know it came down, and then it looked like it had a comeback. So it's all good. I think anything energy specific, like old school energy, is going to be, 20 years, and then there's going to be a bit of an evaluation, but it's not going to be a quick change, like all of a sudden, like we're suddenly not all going to be on renewables like they thought a few years back. Like we're going to transition out of oil. So like EPD, obviously big oil dependency there. Not so much of the prices, like I said, but oil has to be flowing for them to do their thing. All right. Any last questions? Otherwise, this will be an early night for me, which I will do a little bit of yoga, and me and the dog will go to bed. Any last minute questions? Cool. All right. Well, thank you everybody for hanging out. I hope it was interesting. Oh, maybe you're still on. Cool. Yeah, you're welcome. I will do it on YouTube again in 2 weeks. Next Wednesday, starting 7 Mountain, 6 p.m. Pacific, will be on TikTok. So I will see you guys either next week or the week after. Have a good night. Bye.